It's been US dollar rallies almost across the board this week in the build-up to today's US jobs number. But where will that figure sit? That's the question I'll be asking my next guest today, Vito Henjoto of Invast. Vito, which cross has felt that NFP anticipation most keenly this week?
I would say it's the US dollar Japanese yen cross. Think about it. Both economists' labor market is stronger. But Japan just had the consumption tax hike. But what we're looking at this time with the tax hike is slightly different from the one in 1997 because the condition in the market is improving, and you also have the FOMC trying to taper their QE while Japan continues with their Abenomics, and I don't think there's any huge impact or anything like that. And if you take a look at the performance of the dollar Japanese yen cross for the whole week, the percentage-wise, the U.S. dollar actually have gained 2.37% against the Japanese yen. Compared it to the other major currencies like the Euro US dollar and the GBP USD, they only weakened by about 1% against the greenback.
Stock markets rallied to post-crisis highs on Wednesday after a US employment report provided confirmation that a dip in the labor market was weather-related opposed to structural. How key has this report been in terms of encouraging speculative equity market performance?
Well, I think it's pretty important to, in terms of encouraging speculative market, but traders being traders, most of us really need to see more proof in the market there, especially with the ADP numbers. That's usually very different to the final official non-farm payroll numbers. So we do expect tonight's number to be much of a better representation of the labor market and whether or not it really has improved, and whether or not the fall was because of the weather condition. We need more proof here before we can really decide that. So I think most of the traders out there are still a bit skeptical about all these good numbers there.
If we consider that the jobs number is released on a Friday, a day where trading volume is usually very light, does this go some way to explaining NFP Friday's diminishing importance in the last 5 years, as central bankers remain keen to avoid selling pressures and maintain market buoyancy, irrespective of the jobs figure?
Oh, not at all. I mean, the NFP Friday is still and will continue to be a market driver. The speculative market will continue to instill volatility during non-farm payrolls number. And, longer-term traders, position traders, and economists, they'll still take into consideration what the job numbers is. And, in fact, if NFP was to be released on Thursday, I don't think it would actually change a thing there. So the only time the NFP's effect would diminish is basically when FOMC comes out and says, look, we're not really concerned about the labor market anymore, and don't worry about the labor market, which, it's highly unlikely to actually happen. So I think the NFP release date, whether it's Friday or any other day, is not going to change the fact that it is a job number, and it's a number that a lot of people are looking at.
And lastly then, Vito, in your view, what will today's number be?
My guess will be at 185,000. The forecast was for 199,000. Well, we see a stronger labor market, but I'm not overly bullish as to agree with the current forecast out there in the market. I mean, 3 out of 4 weekly unemployment claims in the past month is actually higher. So we will see a little bit of gains, but we wouldn't be overly bullish on this one. So I'm sticking with 185,000 for now.
Vito Henjoto of Invast in Sydney is going with 185,000 jobs added. But what's your number? Head over to the Dukascopy community pages and have your say. Goodbye for now.